What up, what up, what up? Sam H, thank you for joining. Hey, SFG, thank you for joining. How's it going for your weekend here? Demon, Mr. Ford, what's up, what's up, what's up? Or gals, whoever else is out there, good point. Guys is an all-inclusive term, right? Figure out which brokerage to use to integrate to TradingView. As far as like a futures prop firm or an actual broker? I will say for me, for options trading and my personal futures account, I do use TradeStation. I know a lot of people out there like interactive brokers. You got a lot of TOS people. As far as TradingView goes, I don't really leverage the TradeStation integration. I do use it though to make sure that whatever my data subscriptions are is correlated. So that is something that, yeah, if you trade a personal prop firm account, I always execute in TradeStation. I don't want any lag at all on my personal account going through TradingView. I just haven't messed with it, but it's like a paranoia thing in my head that I need to make sure I have like the fastest possible execution. So, but yeah, I mean, you can give it a shot. Hey, what's up, Moki? Thanks for joining. I know it's kind of a last minute thing, and we hinted at doing this stream. So if you guys are joining, I appreciate you spending part of your weekend with me. I think we'll go over a few things here once we get a few more people in. If anything, we'll just hang out a little bit, talk the market, talk the upcoming week, what I think we might see going into Monday at least, and maybe recap a little bit end of day from yesterday. So if you guys weren't on, we'll do that. So I'm just gonna get my stuff kind of prepped here. Bear with me a second. What's up, Alan? Hey, good to see you. Thanks for joining. Get the paranoid thing. That's why I'm researching. Yeah, it's hard to say. Like I said, for me, the whole thing is my personal funded account. I'm just going on the native TradeStation futures platform. I just don't want to get any more risk than I need to otherwise deal with. So that is my only recommendation there. But as far as other benefits of the integration with TradeStation into TradingView from a brokerage standpoint, like being able to quickly pull up your options contract without having to go back to the broker, that is a big benefit for me there for sure. All right. Good morning, guys. Well, afternoon, depending on where you might be. Thank you for tuning in. We'll cover a little bit of what went down Friday, and then I think I can get into the week ahead and what I see from a positioning standpoint. And then I would also encourage you guys, use this time to ask some questions. I know during the week it gets really busy when some of us are presenting and maybe actively managing a trade. So if you guys do have some questions or you're struggling with something and want some guidance, I think that's a huge benefit of having these live streams and having a bunch of people that have some experience or different kinds of experiences in the market or different viewpoints. Yeah, I would say this is your time. So obviously we don't want to do too much like one-on-one hand-holding coaching, but if we can get some information that maybe someone else is struggling with, if you have one that you want to share, we can certainly get into the weeds. What's up, Jake? Hey man, appreciate it. I will say this is a lot easier for me to do because my family decided to go on a little road trip with a relative today. So I kind of have the time. So what better way to fill it than talk the markets? Because if you're obsessed with it, why not talk about it, right? All right. What's up, guys? If you are new here, if you've never seen me before and wondering who I am and haven't caught any of my pre-market streams, my name is Mitch. I'm a former Mastermind student from the Mastermind 15 in the Rake Trades Discord and program. I am kind of the gamma geek out of the group. Everybody trades things a little bit differently. We've got EMAs, we've got levels and price action, we've got ICT concepts, so a little something for everybody. If you are a futures trader, fear not. My system applies, and we'll go over kind of what happened on Friday, yesterday, and kind of recap what I did, what I saw, how I built my plan, and see if it resonates with you guys. And then also look at the week ahead. I think there's some interesting things to come. So off the back of a really strong rally and some new all-time high breaks yet again, do we get a pullback? Do we get some more rest, or do we just reload for the next leg up? We'll find out. Yeah, I will say, if you guys have questions, please, please, please use this time wisely. Ask those questions. If you're here and you're tuning in, thank you for joining, but I'm here to be of service to you. So if I can give you any answers to burning questions you've got, if you have some struggles, whatever it might be, this is a great time to ask those questions. Because the market's not open. This chart is not moving, if you hadn't noticed. So we'll have a lot of time to kill and a lot of space to fill. Seth, I don't know about stupid to use TradingView. I think it's there for a reason. I'm just saying my personal experience. I'm like so leery of adding a layer of complexity between my execution and my real cash account. When it's an eval on TradingView or a sim funded, it's not my money truly. So like I'm okay with some slippage there, but any benefit I can have on my personal account, I tend to trade directly in TradeStation. I don't know how Jake trades his personal, if he uses the TradingView integration or not. I'm just, like I said, I'm a little paranoid about it. So afternoon, Chris Bullish, thank you for joining. We got Sydney in here. Good afternoon, wherever you are. Thanks for joining, guys. Bullish asked, how to identify a choppy market or a pair you want to stay away from when sitting at 9 a.m. looking over pairs. When you say pair, can you qualify that for me? I want to make sure I'm interpreting this correctly before I answer. Are you looking at like correlation between a couple things, a name and an index? Is that what you're meaning by pair? If so, we will find out. Anyway, as far as for me, for chop and trend, I look at the bets that are placed on the options market. So for me, I'm looking at, are things heavily weighted one side or the other? What's up, Marlo? Thanks for joining, buddy. Are they essentially showing that like, there's a way that I look at it with regards to volatility. Like, where are they selling volatility? Or are they buying volatility? So unfortunately, Samir, I do not use a platform that looks at individual name gamma, but we can go over another way of doing that, or looking at a platform that can provide you that, and how to like look at the options convexity there. But I want to make sure I answer this question about chop or trend, right? So when you look at like where are they selling the volatility, and in a way they're basically saying like, where does the market essentially say they don't think it's going to go beyond? And then where is the risk that they're buying protection for? So in a lot of ways, when we looked at Friday, you could say that we really could tell they were protecting the upside. Customers, you, me, firms, hedge funds, whoever, were basically saying, we're willing to sell from 7,300 all the way up the ladder by 50, 60 points. They were basically saying, I dare you to go farther than this. So they were pretty much telling you, I don't think you're going to actually make much headway up here. So for me, when I built my pre-market plan, I came in and I looked at the positions, which you see on the chart. This is from Friday, guys, so we'll just go with the cleaner view. if you looked, let's just do a replay here. Maybe that's a little simpler, right? Oop. Whoa, danger, danger, danger. The drama. Anyway, we'll just zoom in a little closer. But for me, when I made my pre-market plan on the day, I pretty much said, I think I'm longing any break and hold of 72.75. And if it breaks 80, I'm playing for one of two things. A slow grind up to this like magnetic concentration of positions above, or a quick pop through this range to 7,300, and then I'm done. And then I'm looking for what is the reaction, and then I'm only paying attention to 72.80 the rest of the day from there. We either hold it and work back up, or we reject it and come back and hang around 72.80. I will admit, on the afternoon stream on Friday, when I covered for Christian, I was a little too in my mind about the relevance of 72.80, and just, there's no risk to the downside. There was something that I actually missed that I should have paid more attention to, and this is a lesson for me as a streamer and being new to this. And I know Jake's mentioned it. When you're in a trade, it's really easy to get distracted from the trade because you're trying to engage. The most obvious thing in the world that I kind of hinted at on the options side that I should have paid attention to on the futures side as well was all of the risk into the close on Friday was actually like the convexity I like to play with options was to the downside, right? Like was extremely to the downside. There was no real benefit to wanting to get back and stick to 80 because the risk was any selling pressure at all. And you can see this, it was so thin, would have been back down to this like 72.40 area or 45 area. So I even hinted, I said, if it were me right now, I'd be looking at like a 72.20, 72.25 put if we sell, because selling would mean volatility, which means we ramp. But as far as like coming into the day, to get back to the original question, sorry, about chop, grind, range, upside, downside, positioning says everything. So to me, everything said upside. They're betting that most people are willing to trade to the upside. They were just placing their bets to say, this is about where we think is enough on the day. No one's going to really be able to buy it through here. So I was only truly primarily interested around this range to here. And the risk on the day was what happens if we get under 72.60? If we break through that, then you can get down deeper. But I would need to see that volatility like really ramp up. So that's what I use. I look at those positions or who's placing options bets to say, where does the broader market essentially think things could go? And when you see those kinds of concentrations, it generally lends itself to a good plan on the day. I can trade from here to here. I can trade from here to here. It helps me define my risk. It helps me define my potential reward. Am I interested in a 10-point range or am I interested in a 40-point range? Obviously, I want to maximize my returns, so I look for those bigger ranges. So for Friday, as an example, there was at least a 20 to 30 point range to the upside of potential capture. To the downside, there was probably more, but you have to think about how we were consolidating overnight. We got that break right into the pre-market, right into the open. Obviously, we wanted to test higher, and that's how I built that plan. But hopefully that we can look at tomorrow as an example as well. If I was looking at tomorrow as an example, it's pretty much the same thing. It's mostly all to the upside. It's looking like 73.05 to 73.30 would be the range depending on where we open on Sunday and how we open into the market on Monday as far as SPX goes. So you essentially are looking at 73.30 ES, 73.05, kind of where we tested up to on Friday. All right, guys, if you're just joining us, I see we've got some more people coming in. My name is Mitch. I am kind of the Gamma Geek out of the Project 365 crew. Appreciate you being here on your Saturday. We're going to try to build a little bit of a plan for Sunday's open on futures and how things might look for the week ahead. But I want to make sure I'm also here to answer your questions you might have. So what are the differences between red and green bars on my chart? Negative or positive? Does it slow things down or does it accelerate them? That's kind of the simplest way to think about it. Yeah. How did you come across Gamma? I came across Gamma by essentially wanting to know why certain levels reacted the way they did, whether it was Rake's levels or prior day highs and lows, things of that nature. That is kind of what made me start scratching the itch, I guess I would say. Like it, I've always been somebody who wants to know the why or the how. So I wasn't really satisfied with, well, there was a 2 minute failed sell. Obviously, that means something, right? Like if you're trading price action, those mean something. You use that as a trigger. But for me, it was more about like, I'm not satisfied with, I put gas in my car and it goes. Well, why? Oh, it's a combustion engine. Like there are things that I just have to have the answer to. I don't know if it's ADHD, if that's like a stimming thing where you start learning and then you just want to learn more and more and more. I think that is the fun thing about trading too. Once you start, you are just consumed by it. You are like looking for edge. You're looking for alpha. You're trying to figure out what can I do to get better. And I think that's where it came from. Thanks, Chinese Cow. I appreciate that. What's up, Jonas? Yes, convexity is the name of the game. I would say, as far as the indicator goes, this is a custom thing, guys. But if you want, there's a platform that I use called Vol Signals or VS3D. And VS3D is what I get this data from. And I just have an indicator that pulls it and puts it on my chart, as opposed to just having to stay in that platform all day long. So that's it. Yeah. But as far as any questions you guys have, like it doesn't have to be gamma stuff, guys. Like whatever you have, however you trade, I think we've all got really interesting insights we can provide to one another. I mentioned this on the afternoon stream yesterday. Like the benefit to me of Project 365 is if I had this as a free resource, I still think I would have eventually taken Jake's mastermind. But I think what's nice is when you have a community appeal, is that everyone's here to like kind of get that insight, get that help if they need it. And it's easier to trade with somebody, maybe not on the execution front, but at least understand like we're all cut from the same cloth. We're all people executing, forming ideas, having a thesis, trying to manage our emotions. So if you're struggling with something, you know, like having this community of people who are watching along in the chat, someone who's presenting and can share their opinion, I think it's really powerful. So if you guys have those questions, please feel free to ask them. I'll try to make sure I get to everybody. I use VS versus Spot Gamma, Mr. Ford. I do. I just, I really like Dan, the guy who formed the platform's opinions and expertise. And once I kind of got the hook set, I used to use options depth. I just find the VS3D platform to be super smooth and responsive. And it just, yeah. I mean, they're all very similar price-wise. So you just find one that works for you and stick with it. Beginner question, but the bars are telling you the orders, not potential, actual. These are actually placed orders coming directly from SIBO, and they're updated every 10 minutes. I choose to just look at the pre-market profile and say, what are the strongest positions? And that formulates, like I said, my like who placed their bets and where. What is the biggest expectation, generally speaking? And then obviously things can happen, right? You can have a data print. You can have some huge news come in, and then you're watching as the day goes on. I typically pick the London close to say like, okay, that's a bunch of people out of the market. What's happening post London? Do we like resume a trend after a pullback? Was London the headwind? Were they the ones who were kind of doing some profit taking, covering some positions, and now that they're done, they close and off we go? Do we chop from there? Do we reverse? That's the time of day that I'm really looking to like formulate my rest of day plan. What strikes, what areas am I watching on the chart to decide what I think the afternoon is going to look like? And how do I want to position myself? Do I want to go hands off? Do I stay in a futures trade? Do I look for a new opportunity? Or do I just throw on an options trade because I think we chop? So like Friday was a great example. I actually thought we would resume the upside drift before Trump decided to like, you know, screw everybody with his commentary. I think we were very much on the way. Volatility was getting crushed. And then he reintroduced volatility into the day. And then we struggled to do anything. Obviously, we wanted to chop around 72.80. We kept coming back up to it. But that closing period is where I personally dropped the ball. not being positioned for that, or taking the options trade that I signaled would have just killed. But there you have it. Thank you for your time. I want to ask, what is your foundation of trading? How does the indicator help me paint a picture of how you trade? How to use gamma differently? I have not used flow algo, Fonzie. Yeah, guys, I would say I don't want to get too hung up on this. Like, I'm happy to answer the gamma stuff. So if you're here for that, I will certainly entertain you on it. The easiest way to think about it is you can either look at it, from the customer perspective, like you and me, retail guys, what are we doing? Where are we trading? Blah, blah, blah. Or you're looking at it from the market maker perspective. Guys like you and I, we are in and out of our trades. Generally speaking, somebody buying a call or a couple calls or puts is not holding it throughout the entirety of the trading day, right? Maybe they are with size because they're buying at the money or whatever. But most people are speculators. So I'm in and out. I don't think I move the market. What does move the market, in my opinion, and why I look at this is if big money, big customer, like professional customers, firms, funds, have to go through a market maker to take on their size and their trades, right? To execute those billions of dollars of trades. That is more influential to me because those positions generally are held throughout the entirety or most of the trading day. So when that happens, you can essentially have an edge of where are those people placing their bets, and then consequently, especially because SPX and ES are so tightly correlated because of the liquidity, market makers hedge SPX with all sorts of things, but mostly they hedge it with ES futures in minis to hedge the delta of the positions they're holding. So if I know where they're positioned, how large they're positioned, and what the expectation of the required behavior is from them as we get to those areas on the chart, I can formulate or have an edge of those expectations. And then I can use my framework, which I think you guys might have seen on my chart before. If, then, unless. So Friday's plan, once again, if you guys are just joining, I'm just kind of talking through my strategy, what I use, how I use the information I do to formulate my trading plans. If we break 72, 75 and hold it, I'm looking for a break from 80 to 7,300 plus. My expectation is a big time break there. This is a wall. So we either grind up against it to eventually break through. Some of these people get rid of those positions, which means more buying to the upside. Or we reject and come back to a balance. And if we hold that balance on the day, we will slowly, magnetically want to work our way back up to that because of the dynamics of positive gamma. It sells futures to push you away. It buys those sold futures back if you are in proximity as the day goes on. That's the whole thing about theta, the time decay, right? In this world, they call it charm. It's a charm effect. Passively speaking, there's a supportive flow of minis that have to be bought because of all the positions down below us that are decaying down here, as well as the ones that were selling you, as a resistance above. If you're close enough to them, it can become very magnetic. And we actually saw that with 72.80. It was kind of a support, and then it ended up becoming a resistance, but it was also magnetic. It was the closest balance on the day, but the volatility is what could send us lower, and that's ultimately where it did to this little balance down here. So that is the crux of it, but I like the ability to have that if-then. If we break this, then we go here, unless we reject, and then we go here. And if we go here, then we hold it and go back up, or we go lower. If, then, unless. I am constantly looking for those opportunities to two-way trade. Some days you see a really strong trend potential. Other days you assume chop, or you say, I don't think we stay up here because it's really risky. There's not any balances in between. So when I say I'm looking for a door to open with a lot of room to run, I'm not looking for a door that opens into a closet like a dead end. I want the range. So this helps me identify, am I looking for a 20 to 30 point winner? Do I want to hold more contracts? Or am I looking for a quick 10 to 15 points? I'm not looking for the 30 point, runner today. So I hope that answers that question. See, got some more people kind of trickling in here. Appreciate you guys joining. This is Mitch. I'm a host with Project 365. I'm normally the pre-market guy talking about gamma and formulating a plan for the day, which you kind of just heard. But here to answer your questions. So I am going to make sure to get back to the chat here now that we covered that one. Yeah, I appreciate that, Alan. I mentioned this before, like this is such a great opportunity. If I was starting and I was newer or I was a little more green, I think these streams are hugely beneficial. People that have been been through it, from being a signal guy, a chaser, to a student in the mastermind, to becoming my own kind of person and finding my own strat and style. Same with Alan, same with Christian, Ron, and obviously Jake, who's clearly the GOAT here. I think, I'm just a guy. I work a full-time job. I have 2 kids. I've got dogs. I've got shit to do. But trading has afforded me so much more in my life and an opportunity to change my life that I cannot think of a better way to like give back than show that you can have it too. And if you do things the right way, if you have a plan, if you have some consistency, if you're focused on process over profit, there's nowhere to go but up. So the idea, like Jake has said before, don't give up. If you bet on yourself and you truly believe in what you can achieve through trading, and you are committed to that journey, there's nothing but opportunity for you. ZPS, I will say people get this confused a lot. This is just positioning data. I'm not watching the tape actively. What I'm looking for is like interaction with price at those areas, and is it doing what I would expect? And looking for those opportunities from those reactions, and what I think should be happening mechanically. So I'm watching volatility a lot. I'm looking for those reactions. I'm trying to figure out, is this a good quick 10-point scalp, and then I hold runners for another 20 points. If this happens, then this happens. That's it. So I'm not actively looking at anything but what's on my chart and what these levels are. Yeah, I would say session closes are huge, especially if you're like someone like me who loves trading SPX for the huge convexity plays. I cannot even count how, if you have this in front of you, you can see, and this is why I'm really pissed at myself for Friday's close about like taking some trades on stream, like just because they were all profitable trades except for one, and I just didn't take profits and took a break even. But the one that I shouted out where I said, if you believe in volatility into the close, the positioning showed it on the chart. There was actually weakness there. So any selling pressure or volatility had the potential for like a rapid 20 to 30 point drop into the close. That's where you're looking at like a really cheap naked put or a put spread, like 5 wide even. You could have said, like, let's just say if we were talking like ES options being the same as XPX, you could have said, I don't think we actually hold up here. You could have taken a 72.60, 72.55 spread on SPX for like, at that point, the straddle was saying the market's only going to move 4 to 5 points. They weren't expecting that kind of a sell. So the market is mispriced on options. You are basically saying like you could have turned like a 80 to $1, so $100 into $500 in less than 5 minutes. And if you went naked, if you took like a 72.60 put, let's say if it was ES as opposed to SPX, you bought it for $1.50 and you finished in the money by 15 points or 10 points, you just turn that $150 into $1,000 or $1,500 in minutes. The convexity of SPX options with this system and this data is incredibly powerful. That's where I make most of my money because I like the cash in my pocket by the next morning. I don't have rules. I don't have to worry about futures, but I also always trade futures off the same information. They're just 2 different vehicles driving in the same direction, right? So that is how I use it. But yeah, end of session is everything. Those are where the big kind of cheap wins can come from. And I know there's guys in here. Jonas, if you're in here, can speak to that. I think Jonas, we signaled one the first week of Project 365 in the afternoon in the Discord, and it was wild. I think that was a day it went from like $80. I paid $80, and I think I made 2,800 on that contract because we caught a little squeeze. But Yeah. If you guys are interested in option strategies, let me know. But I know a lot of people are here for futures, so we'll kind of stick to that mostly. J-Dot in the house. We got the dad squad in here. Everybody's got their New Balance on, ready to mow, I bet. Hawaiian Blooded. Yes, that platform is that much, and I've used them for a year, or not a year, maybe like 8 months. I'm officially their first platform customer, actually. Not on purpose. It's just, it worked out that way. But I was with Options Depth before that. They're like $250 a month. There's all sorts of platforms you can use. I didn't sell anybody out, Marlo. I still drop nuggets in the mastermind chat. But yeah, we are the dads of the Avengers. But yeah, kids and dogs. Glad I caught you on stream. Sorry if others asked this. What software trading view indicators that I'm showing? Guys, if you're new here, if you're just joining, you've probably heard this a couple times if you've been stuck on here longer, so apologize for that. This is just a custom indicator I built through Claude to take the positioning data from a platform I use and just get it on my trading view chart. It's just easier to streamline things for me that way. But the platform itself is far more dynamic. It updates every 10 minutes with new positions. I just tend to structure most of my day around the pre-market, and then I reevaluate after the London close to see if there's been big shifts or not. And I actually do the same thing. So tomorrow night, I will run the whole week's positions, Monday through Friday, and look at that as a way to say, like, okay, each day of the week, what is kind of the general bet and the flow of what the market's expecting? And then each morning I'll kind of evaluate, okay, does this kind of still hold from Sunday? What about this week was I expecting day by day? And then I just treat each morning as its own thing. I kind of have that in the back of my mind. How did we look on Sunday positionally? Have the bets gone up? Have they kind of moved up and out, or are they kind of starting to buy some downside? Are they thinking we might drift lower, so they want to position for that outcome and be hedged that way? And that's what I'm kind of interested in seeing. But yeah. Let's see here. Interested in options. Where's the best place to learn all this? Scooter, I would say if you're here, I'm obviously going to toot our horn, and I'm going to advocate for the Rake Trades Discord. It's where I learned everything about trading personally that took me to the next level. So you get access to the Rake levels indicator specifically, which are the blue lines you see on this chart right now. And that's primarily like a level-to-level price action trading system. You also get information about options, dynamics, and behaviors in that mastermind course that's available to you in the Discord, which I took as the full course years ago. And it was literally within a month after finishing that course that I went on the upside of the Nike swoosh effect. So I cannot advocate for that enough. I'm not selling it to you guys, but I'm saying if I were starting, I wanted to learn more, that's where you do it. I'm also in the Discord with the channel. I'm generally signaling my trade ideation of what I want to do from an options standpoint, be it naked calls or puts, spreads, butterflies, you name it, there's an opportunity for it. But that's what I would do. Yeah. Can I explain what options convexity is, Mr. Ford? It is just the idea of what is the strongest risk to reward? Where is the explosive capability for this thing to profit? It's basically the idea of pay a little, make a lot, right? So I don't want to pay a lot and make a little. I don't want to play an iron condor on a day where I'm actually risking more money than I can gain from it. That's not convexity. Convexity and options is the name of the game. If you don't want to play convexity and you're just paying for less explosive gains, you're buying in the money, right? You're paying more to have safety, where options are all about, they are priced. The whole idea of IV, implied volatility, is pretty much putting a percentage on something, on the odds that that contract you are paying for finishes in the money or not. So if you are taking bets and placing bets on things that are not convex or too convex and they don't realize that volatility, that contract gets IV crushed when price does not get there. So you could have gotten the direction right, but you picked the wrong strike. Now you're shit out of luck and you're losing money. So it's all about strike selection, looking for those convex opportunities. And what I trade, the way I trade, is I see where the convexity might stop. So it's probably smarter for me to put on a trade for, like in this example, if I was looking at SPX on Friday, at the morning, I would have been looking for, like, you could have taken a super cheap, like, I don't know, SPX 7260 to 7270 spread and paid like maybe $1 for it or $2 for it and made seven, because the gap between the two strikes is how much you can profit off of a spread. You have limited upside, but also limited risk, right? Whereas with a naked call, you could pay $500 for that call because it's early and the premium's juiced, the IV's juiced, and you get the direction a little bit. But the second it pulls back even 3 points, that also screws you, right? It doesn't hold the value where a spread does. So there's all sorts of opportunities. Hopefully that's a good enough explanation for now. But yeah, interested in option stretch as well. Chinese cow. Yeah, that's what I look for. I look for convexity in the sense of spreads. I've played less naked calls and puts these days because I'm looking to try to like have better defined risk. So I think that's like the big thing for me is that idea is can I basically keep an eye on dynamic risk at all times? It's the idea of if I can only make $1,000 on this spread because it's 10 points wide, do I really need to hold it for that extra $150 or have I made enough today? So it helps me kind of say, like, what's the likelihood of getting the full pay on this spread? Do I need to hold it for just 100 extra bucks? Or am I capturing enough of this and being happy because I only risked $180? It just, especially for the people that are out there trading options and you're like, oh, do I trim? Do I not trim? Oh, I just don't know. It takes that out of it because you know that you can only make so much. Some people don't want that. They want the unlimited upside of like a truly explosive move. And there are plenty of ways to do that. It's just about having the edge of knowing generally like where can it go. So if you're trading the level system, catching a level to level move helps you do the same thing. You have a level on your chart that you're like, that is my target. And if we get there, whatever I get on my options contract, that is where I'm trimming because that is my edge. That's where I have defined my risk to say, if we go from here to here, that's where I'm trimming. Where for me, I'm largely doing the same thing. I'm just doing it off of SPX positioning and correlating that with ES. So yeah. Let's see. If you guys are just joining, thank you so much for being here. If you got some questions, get to them in the chat and we will get to them, get them answered. I appreciate you guys joining. My name is Mitch. I'm with the Rake Trades Network, Project 365. I'm the Gamma guy, so I think in a few minutes here, after I answer a couple questions, we'll get looking at Monday's positions. Menther Q, Trim the Trader is a little different from what I understand, unless they've changed something. They use naive GEX levels, which is fine. It's just a different set of expectations if you're going to trade it that way, personally. Do I monitor VEX for 0 date? I am not actively looking at it as a metric. I am just monitoring implied vol versus realized vol and that relationship at these areas on the chart to see is volatility expanding or is it contracting. Homage, never heard that much info on options. If you don't know that information on options, you probably should not be trading them, in my opinion. If you, again, I know that most people that are watching YouTube are probably watching it because of futures. Trade futures. Futures is the lowest barrier to entry with these prop firms and the easiest way to make money simply off of price action and structure. If you don't want to have to think about options and the convexity and am I doing this, am I picking this right, trade option or trade futures. Futures is like a great convexity play. If I can turn $100 on an eval into a potential uncapped 6 payouts with payout limits of like, 12,000, what better risk to reward do you want than $100 that potentially turns into $12,000 over a few weeks, right? On some of these accounts that are out there. So obviously some have no payout caps. There's all manners of ways to trade them. If you're newer and you want something a little simpler, then just take some of those accounts. Lower the barrier to entry, lower your risk. I would say though, if you're new, like Jake mentioned the other day, put it on a debit card. I've seen way too many people get ass to elbows deep in credit card debt because they're chasing prop firm payouts. And then the next thing you know, you're one of those people desperate to get a payout because you are desperate to cover your credit card bill. So you're not actually making money, which is a pretty shit place to be. Yeah, futures do make the whole thing way easier. Yeah, if you want to get back into options, Mr. Ford, I'll be there. There's other guys that are playing those strats, like Ron G hit his banger Nvidia trade the other day. So what more could you ask for? How am I managing with headline risk right now? I'm actually glad you said that. I think it's easy to get lost in headlines and, oh, this market's manipulated and whatever. Do you want to make money or do you want to be right? I know other people have said that, but it is a really important point to make right now, I think, is that what I find beneficial about trading off of zero date information, I am not invested on if the market goes up, down, or sideways. And why? I don't care. I am here to make money, extract money from the market. If I'm trading futures, I'm capturing points. If I'm trading options, I want that cash in the bank. I don't care that we are going up, even though oil is at record prices and trading 120 and should be at 200. I have plenty of macro thoughts, but if I want to make money, I need to find a way to trade what's on the chart in front of me and be able to divert my mind from the should or could and focus on the what is. So I think that is something that if I trade what's in front of my face and trade the market exactly as it is, then I don't have to think about the way it should be. I am here to make money. I don't need to be right to do it. I just need to execute on my plan. And the rest of it will do what it's going to do. The market is going to have all sorts of influence. Headline risk sucks, but if you're aware of it, then you're kind of positioned for it. Obviously, it blows if you've been stopped out or you've had a great trade and then you get a Trump headline like Friday. Like I said, I was literally in this trade. I was in a long here on a second attempt, and then I got stopped out because we got the tape bomb where Trump said all of his shit. And we got that immediate spike. I know you guys saw this, right? It happened at the start of the London close, which I think is normal. It's like some profit taking, their session's ending. My base case was a drift back up to kind of grind up here, and then Trump decided to say some shit, and in literally like 1 minute, I bet if we look at that on the 1 minute chart, you'll see it. Where was it? What time was that? Yeah, I think it was in here somewhere, but like the vol spike at that moment was right here, 10:45. We just had that humongous, where was it? Right here? Yep, right here. That one big candle, that's a 1 minute candle of Trump. I can't account for that. So I'm not going to bitch about it. It happens. But once it happened, what did it do to the trajectory of the day? It made the odds of drifting back higher that much less likely. And then look what happened. 70-80 ended up just being the chop number. So that's why I said, and I forget what update, I pretty much was like, I bet we just range around 80 now. Smart play for me for options at that point. If I'm expecting a chop day, where do I think we're going to chop around into the close? Throw on a 70-80 centered fly. Obviously that's a yes, you get it. It's a little bit different, but I can't do anything about that headline. I can just react to it. So complaining about it is for somebody who's not serious. But yeah, I guess that's just it. If you want to make money, if I want to make money or do I want to be right, I have to disconnect the former from the latter. I have to focus on one thing and not the other. It's too easy to have explanations and complain about the headlines. Are rake levels sometimes confluence with gamma walls? Yes, Daniel, I'm glad you asked that. For people who are new to what I do, that is how I try to frame it for them, is that if you want to know why did that level get a reaction but not that one, I think that's the big thing for me, is saying above all else, I'm here to provide confluence. I'm not expecting everybody to pay for the platform and get what I get and understand the intricacies of it. But if I can at least help you formulate a plan for the day, or give you a little extra confidence around the levels that you do have access to, or the EMAs that are trading where they're trading. That is what I would hope someone's takeaway from this is. This is my expectation there. I don't think that level really matters, but I think this one matters, right? So that is kind of how I would be leveraging this. If you just tune in the pre-market stream of mine, or you're in the Discord and you see my updates and my plan or why I'm taking that position, and you have a level there, if Rake has a level there, if you have EMAs or some kind of a trend line, whatever. I think the benefit of what I have is that it is like big institutional money, big customers, big flow, dictates most of the market moves. So if you have an edge into like a mechanical response at these strikes, it gives you a better picture. So that is how I think about it. Am I prop firm versus my own capital? Seth, I have both. I trade prop firms very like loosely. I'm not going to lie to you guys. I don't really expect much out of prop firms. Sometimes I trade a prop account like just to have I don't want to spend this on my own, so I'm just going to trade this eval off this theory and get aggressive with it. Or like I'm trying copy trading now for like the second time ever. So I got 5 of those Tradeify accounts and passed them in 2 days or 3 days, whatever it was. I think the Tradeify Selects, I think it was. But I like the Lucid Flex accounts. I probably could do it for the same reason. I just like that I could buy 5 at once with Tradeify. So I did it and passed them in 3 days, Actually, yesterday I had to make more money on a couple of them because I thought for some idiotic reason 40% was $1,400 instead of $1,200 on a $3,000 to pass because I'm a jackass evidently. So yeah, I think you could make arguments for both. If you, depending on how quickly you want to pay yourself out, if you're happy to carry the risk of a personal account and you have the capital to do it, or you're taking prop firm payouts to fund a personal account, as long as you're managing your risk, I don't care how you do it. But I think for a lot of people, it makes tons of sense to milk a prop firm on low risk to your personal capital, as long as you're not like racking up credit card charges. Maybe you like credit card points, I don't know. But the safe way for somebody who's new to trading and has never done this before and is confident they won't get blinded by the big number for a potential payout, and they focus on process over profits to start anyway, I think that is what I would be doing, is trading props. If I hadn't already been more of an options trader to begin with when I started, I do think prop firms would have been my all-in. But now that I made most of my money trading SPX, it's really hard to divulge much of my strategy from that primarily. But that's why I have prop firms. I do trade a personal account when I have like a lot more confidence. And if we end up getting into this kind of a low volatility market that we seem to be heading towards, the edge in my stuff gets a lot stronger because with less volatility, there's actually more respect of these gamma exposures and strikes because the influence is much larger when there's low volatility. People might consider that like a boring market because the ranges on the days get smaller and smaller, but it gives me an edge from an options perspective, especially because I get paid on time on a fly or a spread if I pair that with the direction or the range correctly. So I love volatility because it's more points for futures and more range, but I like tight ranges just as much because I have an edge in a different way. So, but yeah, like Josh said, the whole thing for me, plan your trade, trade your plan. If you have the right plan, if you have a contingency for everything, there's no way that you can bitch about garbage price action. Do one. I hate that. You can call it garbage when it's range because you don't like trading a range. That's fine. But there's opportunities in the market every day. I don't even trade individual stock names anymore. I'm literally ES, SPX, and maybe MNQ on the side if I want to take something. So I don't even trade individual names. But there's opportunities every single day, regardless of the instrument. If you're complaining about price action, it's because you don't have a plan for it. So either change your plan or accept that that's your preferred method of trading and go do something else for the day. It's really easy. Hey Punisher, thanks for joining. Thanks for any new viewers. I know I've been on for a while here, so hopefully we've answered some good questions for you guys. See, Seth said, been trading zero date for 4 months. Started in December, had a profitable month, had to switch to futures. Theta and Ivy Crush killed me. Yeah, you just got to know your animal, what you're hunting, how does it act? So um, just kind of got to be able to accept the risk there and know what you're trading. But yeah, futures is much simpler, much more defined. Can you take trades solely based on rakes levels? Yeah. I don't want anybody to think that I'm saying this is the only way. All you've ever heard me say is this is just another layer. If you're trading price action, the levels are a way for you guys to define your risk. If those are areas of interest, like I can't speak to it. I know Christian does it. ICT concepts, right? You are watching price action at a level. You are making a bet that whatever you think the expected behavior there is leads in this specific outcome. We are all just playing a probability based game. I am just hoping that the coin I'm flipping happens to be weighted more to one side than the other when I'm flipping it. Okay? There's no guarantee of an outcome. There's an expectation of behavior, but any manner of things. Big market flow can come in. You can get that volatility. A headline print comes out of nowhere that totally changes the narrative and then the reaction. I can't account for everything. I'm trying to say that the probabilities align. So if you're trading multi-time frame analysis and you're looking at I'm only taking this trade because there's a bigger uptrend and I'm getting a pullback on a smaller time frame to catch the next leg in the uptrend, fine. That level itself doesn't dictate anything. It's a way for you to manage your risk and have a probability of expectations of from here to here, then here. Same as what I'm doing. If it holds this level and I get a buy signal, I'm confident that this 15-minute pullback inside of an hourly uptrend is going to lead to the next leg up in an hourly uptrend. Okay? That's all those are going to do for you. I hope there's no magic wand that you can wave to say, I'm going to be profitable if I do this every single time, right? So you just have to manage your expectations, and just risk management and process is the name of the game. If you deviate too much because the next time you size up and the time after that you size down and then you size up because you sized down and caught a winner and you're mad you didn't catch more, now you have no consistency. Your plan is out the window because you didn't really have one. So that is my big message: is have a plan, trade the plan, process over profit. Profit comes with successful process. Does PA ever get in your head when you're trying to hold for your targets, or do I fully trust the gamma? I'm not trusting the gamma, Gail, sorry, Maldonado. It doesn't really bother me. I'm just saying, like, is it doing what I expect, and what invalidates my plan? So I give it a stop for a reason, and more often than not, it'll hit the stop and I'm out, or I'm at a place on the chart where if things continue in the way that I had a plan for them, I'm okay going to break even, because something about what's on the chart is going to invalidate that thesis if it comes back to break even at that point, right? So I tend to be someone who trades more contracts, trims at a target, holds runners to do the rest. Whether it's options, same thing. I'm taking 2 to 5 spreads, I'm cutting 3 or 4, and I'm leaving the last one for a potential full profit if I've already made 100, 200, 300%, and my maximum is like 500%, from the risk, then I'll let that one be the runner. And if I get the full payout, great. But that's the whole dynamic risk argument as well. So hopefully that answers your question. Made the most money on range days. Yeah, ZP, if you're depending on your style and your trading, that is entirely possible. Range days can be super profitable, especially if you know the range and you're confident in it. Scalpers delight, like I think one of those first streams I had with Jake, it was like somebody said, this isn't a range day. And it's like, what isn't a range day about this? We've literally been chopping 15 points either direction for 2 hours. Somebody made plenty of money in that time. You could trade 3 ES in a 10-point range back and forth for 2 hours, and you've made more than somebody's going to make in a week. It all depends on your comfort level and your style. So yeah, XSP. Yeah, XSP is a great instrument if you guys are not confident in trading SPX and the multiplier. XSP doesn't have the same multiplier, but the benefit of XSP over SPY is, and I will say this, anyone who complains about liquidity compared to SPY can do one. It's close enough. And the benefit of XSP being cash settled like SPX means you don't have to worry about how long you're holding something. You can get the benefit of finishing in the money and not worrying about getting assigned any shares of an ETF. So I do advocate for XSP as a low barrier to entry options trade if you're going to trade SPX. Yeah, no problem. Oh, God. Gmald. Should have known. Marlo, deal with this guy. Just kidding. Love you. All right. Anyway, guys, let's look at this. Let's pivot. Let's go look at the positioning for Monday. Okay. We talked enough about Friday. So let's see. First things first. If I'm looking at this, if we opened exactly where we closed in the, whatever that is, 4 p.m. Central Time, if we cover 72.55, it looks like we're going to at least go test 72.85. Upside target on the day would be 73.05 with the possibility of an extension to 73.30. So you can imagine if we have a gap up on the day, let's say we gap back up to 72.80. The risk for me in this broad zone here is there isn't really any strong balance between up here at 73.05 and 72.45, right? I don't believe markets are closed. If they are, it'd be weird that we have positional bets for the 4th because today's the 2nd, 3rd Sunday, Monday's the 4th. I don't have data for Friday, which I think is weird in the platform, unless they just shifted everything a day forward, which is possible. But regardless, we'll just we'll look at the positioning here. So give me a second. Anyway, this range, this is what I like to call like you are free to move about the cabin. All of this is accelerant either direction. But what I would say coming in on the day is the same story from Friday applies. The higher you go, the more you would expect things to likely slow down up here. That is a shit ton of contracts at 73.30, almost 20,000 of them. That is hugely influential. But the same story would apply. If I'm over 73.05, the idea would be a pretty consistent, steady grind or magnetic pull up here. The market would just have to get really bid to get into that next zone. And then the risk below is going to be from here to here. So 45 to 72.05. And the reason why that's a risk is twofold. It gets bigger and gets smaller and points down. You've got a couple accelerants here, and then you've got this block of support here. So the market's pretty much telling you we are pretty confident we're not going to go much lower in this range. And if we do, it'll probably recover. And if it doesn't, it'll get pinned down closer to 72.05. So the opportunity is from 72.50 to 7300. If we gap up, the odds are a retracement. You have to make sure you're holding in this range. And then you want to either just drift back up here, with the risk always being volatility to sell you back down into this range, or you get the extension up to 73.30. So if I was building a plan for Sunday futures, and I would be looking, one thing I'll share with you guys that has been like very, very accurate to monitor potential futures prices into the open for Sunday futures, I have been leveraging this link right here to keep an eye on things. And that is kind of an approximation through USDC stablecoin transactions. And it's been almost 100% nailed on for where we open for futures on Sunday. Obviously, it's not 100% every time, but it's a pretty close approximation. So keep an eye on that over the weekend to see kind of where that is going to line up. That is actually based on SPX, not ES. So you obviously would have to do a little math on that. But we closed at 72.30 on SPX on Friday. So if I was looking at where 72.10 is going to be, which is where that hyperliquid sits right now, I would be looking, we're kind of right here in the 72.40 area, right where we are, just about. So if we opened here futures Sunday, I'd be looking for a hold along with the test at 72.55. If we break past that, I'm looking at 72.70 and then climbing the ladder to 73.05. But when I look at things too, that's how I do it, guys. I look at what are my ranges and what has to happen to move through those ranges. So we're not past 20 days notorious for smashing through gamma walls. What is a gamma wall, Daniel? Can you quantify your view of that for me? Gamma wall to me is something like up here. When there's literally like 60 to 70,000 contracts or more, the notional behind that from a gamma perspective is monstrous. We're talking like 20, 30, 40, 50 billion dollars worth of notional underlying that has to be sold against you of ES futures. So thousands of contracts of minis are saying, I don't think you go through here. So I don't think we've smashed through many gamma walls. All they keep doing is they keep rolling these up higher and higher and higher as volatility comes down. So whether you believe in it or not, there's a reason why when I make these plans and I put these numbers here and I say, I don't think we're going to here, but I think we could get here. That's why. They are rolling it up and out. Volatility comes down, the range gets smaller, and the ceiling is set. So big strikes like 7,000 are not counted only if they are a band. Are you saying 1,000 is a band? You're going to have to be more specific. No one strike on its own is enough to like really dictate too much. I tend to look at things and how they're stacked, right? One little balance like 72.80, right? 72.80 all day was not huge, but it was the only like positive balance in the range on Friday. Everything bigger was higher, but everything higher was also more influential. 72.80 was holding. I would have thought it was more of a support if there would have been more like this kind of stacked in a group. Then I would consider it more supportive because each rung here is basically saying, I'm buying futures, I'm buying futures, I'm buying futures, I'm buying futures. No one's selling futures against those positions until you're down here. Because once you're through these, you are through them, they've been hedged, and on it goes, right? These are supportive. They're buying the dips, and if they're above you, they are selling the rips. That's why it's a ceiling and a floor until it's not. And then once you're under them, just like Friday, right? 72.80 became the ceiling. We weren't working over it. It was capping the movement up as well as everything above it, right? So here's how I would also look at this, guys. When I look at like the afternoon, if then, what does the shape of how these things are expiring tell me where we want to settle? So if I have a plan for this whole range of if I'm under this, I think we settle here. If I'm under here, I think we settle here. Because everything is a balance between the two. It's the in the money, out the money conversation. So if we are holding over 72.55 and 72.70 into the afternoon, I expect us to want to pin here if we're not over 73.05, because that wants us to find a balance lower between these two things. And the risk is what happened Friday at the close. We're only getting supportive pressure from these as long as you're over them. If you get volatility and some selling pressure, you find the next balance lower, which was right here, right? Yeah. If you guys want to talk in Greeks and gamma in here, like, let's go for it, right? This is net positioning. I don't care if it's a call or a put. Market makers are either short or they're long. So depending on if they're short or long, the behavior of what they're doing as price move through those areas changes. Red, momentum. Whatever the momentum is, they're reinforcing it. Market makers are forced to go with the pressure, okay, with the momentum. But when it gets to the green, they are the counter pressure. They are selling against the move higher until prices move through it. They are buying the dip if price is selling down, unless the volatility is enough and the flow is enough to push through it, then it's no longer supportive, right? the influence is less. But whether they're calls or puts, who gives a shit, right? They're either long or they're short. But that's what makes these zones, like selling through here Friday, really attractive. There wasn't any strong support until lower, right? 72.80 was just a thin balance. But looking at Monday or the next trading day's action, these are the positions. This is where the bets are. We can go higher. They just don't think we're going much higher than 73.30. And if we did get up there, that's a lot that we would have, that's a lot of futures that would have to be absorbed that are being sold against you in order to move through it. So you know that the expansion of implied volatility higher would have to sustain to push through the absorption of that volatility, right? Because they are mandated to sell ES futures against you as you get here. But once you move past it, that influence is less. But the fact that you've got so many contracts selling futures against you for 30 points tells you, yeah, my expectations for Monday is that I'd be happy if we got to 73.30, but I'm not expecting going beyond it. And I'd honestly probably be looking at 73.05 as my like target 1, target 2, 73.15. If we pass that, bonus target 73.30. If we cover 73.05, then I'm targeting 73.15. If we reject, I want to see it hold 73.05. If it does hold, I think we can break through 15 to get to 30. And then this is our range. I've opened the door to this range. This is the midpoint I have to do to finish the range. It's just a custom indicator for it. Yep, I'm just taking positional data and throwing it in there. If you just ask Claude to one-shot it and say, replicate this, if I get you the values, that should do it. But yeah, guys, that's how I look at this, is I'm looking at the time aspect. If we're not over this, knowing how options decay, what is the eventual path to find a balance to pin? What do I think has to change, for that outcome? And then what is the risk to that thesis? If we don't hold 73.05 and we reject 73.15, what is the next spot I would expect us to come back to for a strong balance? This is all momentum area, so if we sell hard enough, we can easily accelerate down. But if we don't, it's going to want to come back up and probably settle right around here, right? So that's my thinking, my trading. But this is Monday's positioning, so this is my plan for Monday. Depending on where we open, I'm going to have a plan for where price is going to navigate, in my opinion, based on what I know and what I use. Yes, I did build it in PineScript. Claude Code works wonders, guys. If I'm looking ahead, just to give you guys a little kind of breakdown here, I'm just going to pull some stuff up that I ran already. Lot of kind of asymmetry on Tuesday, probably the lightest overall positioning day on the book. Red indicates the momentum areas. It's two-way momentum. It can either go up or it can go down. They buy with or against the flow. So yeah. But yeah, as far as Tuesday's really light positionally, super thin to the downside, kind of asymmetric in that way. They've got more of a ceiling, I would say, over like 73.70 to 80 is the biggest block of upside. So there's some potential to really explode higher if we're higher on the day, but it's really thin to the downside. On Wednesday, another thin day. Definitely more of like a grindy chop day, depending on where we are. It's only got a 40-point straddle for pretty much every day this week. So it's telling you the market's only pricing in like a 40-point move right now. Depending on how we move in the overnight on Sunday, that will change. But right now it's pricing in some smaller ranges each day of the week, which is kind of wild. So I think for the whole week, if I looked at the Friday or the last straddle price for Thursday, it's saying that the market's only going to move 90 points by then, which is, it's not signaling great things for a big explosive week. So we'll see what we get. How do I look at overnight action as I plan the morning, or don't I worry about it too much? Well, funny you should ask. If we go back and we look at the overnight action for oh shoot, basically the overnight action going into Monday kind of respected most of the range, right? Like we got a break higher and we kind of stayed in this little range here where the risk was. The risk on the day was like under 72.60, and we pretty much held it in the overnight. We didn't really accelerate through the lows because we had a little support here at 45.50, but the test to the upside was 75.80, and we never really got there until the very end of the pre-market session going into market open on Friday. So I think largely it can be respected. I think when we looked at the overnight on, God, when was that? I think it was here actually. We got that big strong open in the overnight Wednesday night going into Thursday, and we kind of tested up into the 7,200 area and rejected down. This was actually a really strong, I don't have the profile going back to that day, but if you go look at like our pre-market plan on Instagram, or if you're in the Discord and go look at my channel for that, I traded the overnight action off of that. I actually caught this short on NQ, I believe it was. So it was like a really great move to catch. And then I ended up catching this, and I think in the pre-market I caught a bit of it on maybe it was Thursday morning stream, I think, because that was Wednesday into Thursday. I think we caught that on the pre-market stream right about 5 o'clock. We talked about making this move on the day. But yeah, I think I trade the overnight action with this as like information in my head. It obviously isn't as influential overnight because you don't have the amount of flow in the market that's actively hedging those positions, and you get a lot stronger response once you get the New York Open. But I definitely 100% trade a lot of the overnight action off of the same information. So yeah, Victoria, what's up? Got some daily attendees here of like, excuse me, every session. So thank you guys for joining. I've been talking a lot, guys, so I'm happy to keep talking, but I want to make sure I'm answering your questions. I think let's do this. We'll get a little poll going in the chat here if you guys can see it. What do you guys think the next 100 points on ES or SPX is going to be? Do you think it's an up move of 100 points, down move of 100 points, or you just don't know? Because if we're only pricing in about a 90 point to 120 point range on the week, which side is going to win out? Up, down, or indifferent? I don't know if Jake or anybody else is still watching at this point, but if you are, you guys got to tell me if I'm getting like a copyright warning. Because I sure as shit can't see one. Yeah, we'll see where this poll ends up. I myself, I just think they kind of keep hedging the upside. So it's really hard for me to think that, like, I'll share a screenshot with you guys here in a second. Let's do this. We'll go the whole week. Keep in mind, this is like 4 days worth of data, right? Let's see if we can share this. So this is for the entire week in one view, okay? So when I say like thin to the downside and they're betting the upside, we'll see if I can do this. Ooh. I'm going to pull this up on OBS. I'm going to add an image so you guys can see this, okay? Okay, can you guys see what's on my screen here? Give me a confirmation, yay or nay. Anybody, can you confirm you can see this? My stream is delayed, so I don't know that you can. If you can, this is basically the entirety of the week's positions as if it was like one thing. So you can tell there's a lot of overlap with like right now's position. and where the weighting is and where it slightly differs. But when I say it's thin to the downside, there's not a lot of conviction of people like aggressively selling downside volatility where they're basically saying, we don't think it goes past here. So when you kind of get under that 71, 75 area is where the danger zone is to me. So the market is pretty much telling you, we're betting on up, but we just don't think it's going to go too far up, right? So the whole week's positions are here saying, we think we're going to tighten this range to the upside, but there's also not a lot of people buying puts, which would be kind of the consensus of what these red strikes are down below, to like accelerate things down, right? You would expect people hedging the downside to be buying those puts. What they are doing instead is either not participating at all down there and they're only betting up here, or they are selling the downside by saying, I don't think we go down there. I'm going to make money off of all the idiots who think we are by selling them puts, right? That is kind of what this would represent. But the fact that it's so thin from like 71.70 or 71.80 all the way down to like 70.70 tells you the risk is some headline, right? Because no one is positioned for it. And when it's thin, that to me is a win on convexity. Just like here, I treat thin the same way as I treat red, right? It's a place I can move through quickly, because if there's a lack of positioning, there's a lack of participation, which means if you're like a liquidity nut, you would say, oh, it's a liquidity sweep. Like, I hate that. But the idea is there's less agreement on price in those ranges, so you can move through them quickly until you find where there is agreement. So clearly some people think this area matters and you'll get a reaction there, right? So I would be saying we could sell down to here, but I would expect this to be like support that has to prove that it's strong support. And then I'd be looking for opportunities back up into the range. And again, this is the entire week so far. And the fact that this almost perfectly aligns with just Monday's positioning shows you that there is like a huge lack in conviction this week. There's not a lot of agreement unless it is higher, right? So that is how I would be looking at going into Sunday, futures open, paying attention to where we are slated to open. If we are opening right about here, I would probably be tentatively buying a dip that gets recovered to the market open. So if we opened at 72.45 and we got a spike down, I'm longing that recovery and hold of the opening print at 72.45, seeing how we react here, holding it with the same stop. If we push through this, then I'm looking at 72.70 and maybe holding for a run all the way to 73.05 by market open. That is 100% something that I would consider doing just off this. That's it. I don't know about massively leveraged to the downside. I don't see any evidence of that, at least short term, Mr. Ford. So COT, what are you speaking to there? I mean, again, I'm only looking short dated. They can be much lower. Obviously, if I go under like 70.40, then there's far more positions closer to like 10,000 contracts all down the ladder. But I think 71.80 to 70.40 is kind of the where things aren't really priced with any confidence. So that doesn't mean anyone's buying anything to the downside necessarily. Yeah, I mean, you can take that information, but I'm just looking at this. Yeah, guys, I don't know about votes. It looks like it's exclamation vote bull or bear. This is my first time running one of these polls. I thought it would just do it in the little hit a button kind of a thing. Okay, Jonas, so because the 72.60 was held as support right before market open, red gamma was the moment. Therefore, there was a strong push at OP pushing into 7,300. Yeah, so it was kind of, if I look back, this is actually Monday's positioning, Jonas. But 72.75 and was negative, 72.80 was positive. So if you got the momentum of 75 to carry you through 80, that's why I thought the quick pop to like 7305, 7300 was possible. Yep. All right, guys. If you're still sticking around here, I appreciate you hanging out. I do want to say, it's been an hour and 20 minutes. Probably won't go too much longer here. Hopefully we covered enough to give you guys some value. I will say we will run a giveaway here. I have got a 50K Lucid Flex account. So let's see if I can get that giveaway prepped. Let's do this. We'll do 10 minutes to fill this thing out. All right, here we go. We got 10 minutes before this thing runs. So if you guys want to enter, you just do the exclamation enter. Thanks, Gmald. I appreciate it. Yeah, Arsenal's doing the business. We need Arsenal to win. If you guys didn't see, I'm wearing the gear. My kid is named after a former manager of Arsenal, so I need him to not be doomed to a life of harassment because Arsenal couldn't get their shit figured out. So pray for me, guys, that Arsenal wins the title this year or the Champions League. If you don't watch soccer and don't know what that means, then keep doing what you're doing. No judgment. But yeah, I need it. I need it so badly. I don't even know how to tell you how badly I need it, but I do. All right, so we got about 10 minutes before that giveaway is done. 1 ticket per person. Hopefully somebody wins and turns that into a payout. That is the goal. And I would say, guys, if at all possible, if you can support the channel, if you have any friends that are new to trading, I think this is a great place to point them. I'm super excited to see where this takes us. I'm new to streaming. I'm new to having a trading Instagram. Like I said, I'm just a guy with a job who has had great success and changed his life through trading and by finding rake. And I'm so happy to give back to this community by sharing my knowledge that I've gained, the system I use, the things that I do to manage my risk and find trade opportunities. And I've found myself obsessed with it in a way where I just always want to know more, and that's what led me down this kind of dealer positioning methodology and understanding the hedging dynamics, but then also understanding the convexity of options trading with it and finding the best risk reward opportunities there. It's super interesting, the math angle behind the Greeks and the first, second, and third order and how you can leverage that. And I'm starting to delve more into looking at the broader volatility surface and how it interacts from a Vanna and Vega perspective, and what are the things to look for in the profile. You've got risk reversals, you've got flies and condors and spreads you can see here. And if you know how people are placing those trades at large with these positions, you can understand how that might impact the volatility surface and the performance of that kind of a trade, and what are they betting on by placing that kind of position, instead of looking at everything through this really binary lens of calls and puts. If you look at the structure of how people are positioned in the market, it can really be informative. So that whole journey started as me, just a guy trying to make some money trading, as more of a gambler, and became more of a real trader, at least in my mind. So any edge you think you have, I'm happy to help you support that edge through what I do, or just from a risk management perspective and talking those things out. However you're here, whatever you're looking for, hopefully we can provide that for you. And we appreciate you guys showing out and showing some support. So thank you for being here. Yeah, guys. Interested to see where we open, but right now, if I was looking at Hyperliquid, it looks like 72.10 is kind of it. But we'll see how that changes the closer we get to the Sunday Open. So I don't know if you guys are going to get Ron or if you get Jake, if you get both. But I know Ron G for sure is going to do his normal stream time. So hope you guys tune in for Ron. Ron's a beast. Plenty of great trades, plenty of great information that he shares. So yeah, looking forward to that. And seeing what the week has for us. Any other questions here as we kind of head into the end of this giveaway and the end of today's stream? Anything, it is welcome. No dumb questions either, guys. Do I use Bookmap? I don't, but actually Joel in our Discord does, and I actually started talking to Joel about the correlation between the two, so we'll see what we come up with on that front. It's been fun to kind of like share back and forth what I see and then what he's seen in real time on Bookmap to kind of see if the expected hedge response is showing up there the way I would expect. Even on like the passive sense of like, 5 to 10 minis every so often, like every 5 minutes, is there kind of that persistent flow from a charm perspective? I'm keeping an eye on that and seeing if I can, leverage anything that Joel has from his bookmap expertise to see if we can correlate anything there. So we'll see what comes. I'm excited. Like I said, I'm always looking to learn. I haven't delved into Bookmap too heavily. I know a lot of people actually use the positioning data with things like, what is it? I think you can do like a volume profile or something. So I think you could even do that. And if you looked at a volume profile and said like, okay, the point of control was around 75.80, that matched up with the positioning on the day. You didn't get any extension up here. Is that a good high or a poor high? I couldn't tell you. I don't know volume profile, but the idea of like, this was the risk down here. There's some prints to fill in, and then you get balanced back higher. I'm sure if you correlated the positions on the day from the pre-market versus that volume profile positioning, there's somebody who would trade that, right? I don't know enough about it, but that's something, like I said, I like to learn. So if there's anything I can glean from it at some point, I'll dive in. You know what I mean? I'm all about confluence. So this is just what I've been using, and I tend to lean on the simpler it is, the better it is. But even again, just looking at Monday and the positions I look at, and then the rake trades indicator, I think it was pretty obvious. 72.80 and 75 lined up with that, even that volume indicator said those were key areas. So those are some levels I'd pay attention to. Obviously, we've kind of got like our new high, created a level up here. So where do we go from there? If I didn't have any levels on an indicator, at least I have the positions to tell me 73.30 is like a pretty Goldilocks high target for me. 73.05 and 15 are probably trim targets. If I entered at a level right here and got beyond this one, where would I trim? I think it'd be safe to look at 15 and 05, and then maybe 73.30 is the extension, right? So I think there's just a lot of confluence around using this system and your rake levels, whatever it is you have, EMAs. So hopefully this is informative for you guys. If you want to know more, I'll just ping you guys my Insta account if you want to follow along with me there. If you want to join me in the Discord, you guys can use the code STREAM. And then you guys get a discount for the Discord. And the Discord's great, guys, too. I'm not a big sales guy, but I'll tell you, if you're not going to support us through using the codes on the prop firm partners that we have that are great, to support us that way, or just liking and subscribing, and you want to take the next step or get the rake levels indicator or access to my trade updates, Ron G posts some things there. Rake obviously posts some things there. We've got a bunch of other great mods there. You've got Joel, who uses Bookmap. You've got Mullet. You've got J Groove. You've got people in there that are posting all manners of options trades, if not futures trades. So a really, really great community. Alan's in there on occasion as well. So I highly encourage you to go there if you want to learn, the mastermind system. Like I said, all of us hosts came from it. So I will always shout that out as a place for you to learn and grow if you're struggling for consistency, regardless of your vehicle. If you trade futures, if you trade options, if you're completely brand new, if you're experienced and looking for a little edge that you feel like you've lost, please join us there. Before we started doing this, I was like so active in that community to share what I had learned. And some people were receptive to it, some people weren't, but I do have my own channel there to kind of like funnel those thoughts. So if you follow along with me in the pre-market and you want to follow me throughout the rest of the day and what I think, that is probably the best way to go about doing it, because I am mostly only on in the morning. But lots of great hosts, lots of great people there. So yeah, I hope you join us if you can. If not, no judgments at all. And guys, we've got about 50 seconds until this timer finishes running out. 50 seconds. And we will see who wins the 50K Lucid Flex account. And I am just so thankful for you guys joining. Thank you, Peak Perform. I am aware I have it off to the side. I'm trying not to focus on it too much while I did the stream. The timing was a little poor on my side doing the stream while Arsenal is playing a hugely important game. But hey, I'm happy to be here with you guys. This is actually really fun. I've streamed a little less than our other hosts, just with my time slot being kind of funky so early, really early for a lot of people, unless you are, global and it's like your lunchtime or something. And for some of you, that might even be happening right now. So if you're here, wherever you are in the world, whatever time it is, whatever you're doing, thank you so much for tuning in. I really mean that. I appreciate it very much. This is a new thing for me. So as a guy who's never been on Instagram and streamed his face or done anything very often, this is actually kind of invigorating in a way. All right. I believe we are closed. Let us pick our winner. And our winner is going to be, no way, Mr. Ford 007. Congratulations, Mr. Ford. See, guys, if you ask a lot of questions, you get rewarded with giveaway wins. It's karma. Not that I hand selected anybody. This is totally random through Streamlabs. But Mr. Ford, you were very active in the chat, and hopefully I answered your questions to your liking. And if not, your consolation prize was a 50K Lucid Flex account. So congratulations. All right, guys, thank you so much. If you guys want to give the channel a like, if you want to subscribe, we'd obviously appreciate it so much. But happy to do this. I don't know how often we'll do this. If it's an every weekend thing, it's probably not always going to be me. But I would be happy to participate. Maybe we can get kind of a group hangout with the other, the Avengers, the other hosts, give Jake a little bit of a break. But if not, this was a great one-off. So thank you guys for being here. I will say I'll give you another 15 minutes. Actually, you know what? Fuck it. We got 30 minutes. Why cap it? I got nothing to do. I don't want to do yard work anyway. So yeah, if you guys got some questions, let's get them out. I'm happy to hang. Arsenal's winning. Risk off day for me, so markets aren't moving. If you guys have questions about what I'm seeing for Monday, we can go over the profile again and kind of where I see the risk, where I see the potential for movement. But yeah, you guys just let me know what it is you want to cover. Gmald, how did I master my emotions? That's a good question. I think for me, what was really wild is right at the end of the mastermind, when I took my first futures trades on a prop firm, I didn't really know what I didn't know. I was so used to trading options only, and I had some decent success. Like at one point, if you guys are in the Discord, you might remember there, if you even search my name and go back through the 50,000 messages that are probably in there over the last couple of years, I literally was trading snow right after snow kind of started its massive dip. I want to say that was like early 2024. I traded snow every day through options for like 2 weeks straight. And so when I started trading futures that fall, I kind of like didn't know what I didn't know. And I was like sizing in crazy ways. I hit like this massive 7 mini NQ trade and made like $25,000-$30,000 right away. But I didn't know anything about like, what is consistency, and do I have to trade the size every time? What is micro scalping? If I don't trade 7 minis every time, am I not going to make my money? And the emotions of like seeing the swings of the huge dollar amounts was really crazy. But what I realized is like, I was attributing my emotions based on the size. So all that told me was like, calm down, size down. You don't need that. If you stack that every day, you're used to making $300 on an options trade and thinking that's huge. So like, why are you poo-pooing $500, you know, or $1,000 as opposed to 20,000, like, isn't it less emotional to just deal with the $1,000, you know, outcome and risking less? Yeah, Victoria, I'll cover that in a second. I just want to answer this question for Gail. I think that was it for me, is knowing that, like, my risk and how I defined it, and did I have a plan for it, or was I reacting? Was I emotionally reacting? Became really apparent really quickly. So I figured, for me, I had started writing my plan down. I felt like if I didn't hand write it, it wasn't going to stick. Because if I just, like, said I had a plan and I just marked it on my chart, but I didn't, like, write it down and look at it and, like, have to confront it, that, like, what was I thinking and feeling when I wrote that down? That was kind of the entry point for me to understanding that, like, just because I wrote it, I was attached to it because I knew what I was doing in that moment. Whereas later in the day, when I'm in the middle of a trade, the idea that, like, I can say the plan out loud to myself, but I don't have an anchor to it in some way, it's really easy to just emotionally go with whatever's in that moment and not anchor yourself to something and think about that as, like, the plan. So I think that was kind of the start, was the idea of recognizing that my emotions were in control more often than not. And that was also why I ended up scaling down after Liberation Day and I had those huge SPX wins. Was, why am I sizing $15,000 for SPX every day? Is it because I am comfortable with that, or is it because I'm obsessed with getting the huge number today? Oh, I can make, you know, if I risk 15,000 and I get this trade and I trim 80% and I leave the 20%, if I get the 80% here, that equals, oh, that's like a $40,000 day. Sweet. We got 28,000 yesterday. I want 40,000 today. The fact my mind was even thinking of that told me that my emotions were ruling. The head was not. So that's where I said, well, how can I still make good money and still have this port size, but risk less? And that's where I started looking at spreads and flies. And that's kind of where it dovetailed with the gamma stuff nicely, was like, oh, this helps me define my risk that much more. Because what I was finding is when I was in a trade, I was always like, well, what's another 10 points? If I hold this for another hour, I can get 15 more points, and 15 more points equals another $8,000. There was no rationality there. My plan was from here to here, but once it got past that, I had no plan. Then I was hoping, hope or wish in one hand, shit in the other, which one fills up. Like, the scale was starting to get off a little bit there. So that's kind of where I went with it. But that for me was kind of the tell. If I take my emotions out by having a plan and using that if-then rationale, the emotions can't overwhelm me because I'm looking at my plan, right? So that's it. Until you get to a point where, like, size doesn't matter and it's just like you've accepted the risk for that size and your risk profile has changed, more often than not, the simplest thing to do to deal with your emotions is to risk less until you have kind of mastered the idea of accepting risk. Most of your emotions are coming from the inability to truly accept the risk and being okay with the loss. So yeah. Jessica, the indicator on my chart is just it's a proprietary thing that I created through Claude. But if you want this kind of information, it doesn't have to be on your chart, but you want to see market maker positioning, there's all sorts of vendors, and we'll see if we get a sponsor on that front, or a way I can give you guys a code or some kind of affiliate situation there. I use VS3D, Spot Gamma, Options Depth, Unusual Whales. There's all sorts of startups in the space. So do a little research on market maker positioning. Gamma Edge is another one out there. You'll find the thing that fits best for you. Victoria, was it Victoria? Yep. Victoria, as far as Monday, if I was looking at this just from the dealer positioning, the zones that we have here are kind of the ranges I expect us to trade in potentially, and where the risk would be for each. So we'll have to pay attention to where we open Sunday night. But I think the odds for Monday, looking at let's see. I was trying to see what the straddle is, so give me a second. The straddle for Monday is Monday the 4th, 43. So 40-point straddle. So if we opened right here, the market would be pricing in. Let's just show it on the screen here. 72.40. So it's pretty much pricing in 73.15 is our potential upside, and our downside would be like 72.25. I don't think that's right. That can't be right. Just ignore that. But basically, it's pricing into 40-point moves. So from here, 7,200 to the downside, which is the bottom of this range. Upper side here would be like 72.85. So if we open higher, obviously this can get priced in. But the market is pretty much telling you we're potentially going all the way over 7,300 to 7,330, but that's where they don't think it's going to go much further. You got some really hopeful bets up here at 73.70 for Monday, but I'm not banking on that. But I just have these ranges here. Yeah, Frank, that's it. The whole thing is about accepting risk. If you can't accept risk, you are doing the wrong thing. You should not be trading, right? Yeah, it's like time and a half, Daniel, is how I do it. So you can do, 72.40 divided by this times 100 times 100, divided by 10,000 and get your number. But it's easy to just take what's 40 times time and a half, and then there's your max range. But I try not to go beyond that. I try to just do the straddle itself, because the straddle is what dictates what's priced in at that time, right? So as those 20 delta contracts decay, then the straddle decays, and then your range shrinks. So the market's either pricing options correctly or there's a mispricing, and then that's where you take advantage of the convexity. So yeah, hopefully that said it for you, Victoria, but I've kind of got those zones drawn out here. So if we obviously gap down, then your risk is under 72.05, 71.80, and then that's where I'd be thinking, oh shit, we got a lot of volatility. We need to look at this a little closer. But yeah, I think this is kind of your 73.05 to 15 to 30, 72.45 to 73.05. You got some room to move in there. And then broadly speaking, 72.45 down to 7,200 seems to be like a supportive range that would need some really strong selling or volatility to fall through. But that is how I would be looking at it. Yeah, Daniel, I hope that's a good answer. I mean, like you can calculate it however you want, but even if you just looked at the base straddle number, that would be enough, right? So yeah. Let's see what our poll turned out like. Kind of a dead heat here, guys. Bull and bear split down the middle. I don't know that it counted everyone's votes either from the looks of it, but we'll have to figure that one out. Anyway, guys, yeah, I think this is probably a good spot to call it. If we don't have any more questions, we would we'll call it here in just a couple minutes. What's up, John? Thanks for joining. Peak Perform, can I explain, if possible, about the rake indicator? So the rake levels indicator, I can't really get into the meat and potatoes of his indicator and how it functions, how those levels are built. If you want access to the indicator and learn the system behind how to trade it best, you would want to join the Discord to get access to it. But effectively, you can see that these are kind of key levels. Jake, and the way he trades, he is generally looking for level-to-level moves. So the best risk to reward, the highest R multiple returns typically come when you're trading level to level. So what are those opportunities? What would you need to see from a price action standpoint to target one level to another? Whether that's looking to short a level all the way down to another one, if there's some kind of closer to one another, which one is stronger, which one is less. That's where my system comes in to say, like, where's that confluence? So, yeah, Mr. Ford 007, can you follow me here and message me at this Instagram and then screenshot your tag? And then I will work with you on getting that Lucid code. So if you follow me there, shoot me a message, then we can talk. All right. Hopefully that answers your question about the indicator. I forgot who asked that question. Peak Perform. Does that answer that? Is that what you're looking for? Just kind of the functionality behind it or how to trade it? The particulars of that, like I said, are in the Discord. So if you want to find that, happy to answer any questions you have about that there. That's this link. And you can use code STREAM if you want to sign up. And I will just say that access to the rate indicator is there. The entirety of the mastermind system is there, which is literally like 15 different courses in total. All of the videos, countless hours. It's largely the same course over course. I feel like personally mine, the last one was great. There's kind of a couple bonus lessons in there that really tied everything together in a way that I don't know was always there in the previous courses. And as someone who's taken it myself, I can't speak highly enough about it. Even if you don't care about what I do and the way I look at things, I think where most people will benefit from it is if you are already trading rake system. Just like Alan, if Alan is here still, I don't know, but Alan, I believe, uses a lot of EMA kind of confluence as well with what he learned in the mastermind and mastermind levels to take his trades. That's just what I'm doing. It's like another layer of confluence. So where are those levels? Like, what is the positioning to say, like, what is a stronger level versus another one? And how those things correlate. There won't always be confluence, but more often than not, there will be. So, yeah. And in a lot of cases, too, when you look at like prior day highs, weekly highs and lows, pullbacks and uptrends and downtrends and things of that nature, you can see some of that align with these levels on higher time frames as well. Do I have additional courses or YouTube stuff? I don't really have anything on YouTube. Like I said, I'm very new to the streaming stuff. On my Instagram, I will say that I have done this with like 3 or 4 people, I think 4 people total so far, where I have kind of done like a one-on-one mentorship kind of a thing across either a few or single hours. And we can dive into the Greeks as much as you want. I can tell you about like the platform that I use, the different platforms I've used, what maybe aligns best with what you're currently trading. Is there an opportunity to leverage it? Is it to, like, how can we simplify it to make it advantageous for you? And then also a lot of the lessons that I've learned and can share around what took me to the next level from like a discipline standpoint, sticking to a plan, managing my emotions, taking less trades, more trades, this and that. Like, that is kind of what I offer there. I'm not going to say that I'm an authority in the space by any means. I'm not a former market maker. I'm not to Jake's level where I've been trading for 8 years live in front of people every day. That's kind of, this is a new endeavor for me. But I feel like if somebody finds value in that and you would like to spend that time together, that is where I have it. So if you see my Instagram, you'll see links to those things, but I'm not pushing that heavily. If you find me and you jive with what I do and how I do it, then and how I communicate, then I am happy to work with you there. So yeah. Anyway, but yeah, for the most part, if you want to trade along with me and see what I see from pre-market, intraday to end of day, the Discord is primarily where I'm doing that like most often, right? So, Jonas, if you take a look there, I think it's all listed on the Watt page. It's kind of by session, but there's a few different options there to fit everybody's kind of budget, I would say. So, but I'm a busy guy. I'm a dad with kids and a family, and there's only so much time in a day. I think Alan can speak to that. I find Alan really inspiring in the sense that like he works with people very closely, both business and trading wise, and then is up late. And I've found myself doing that quite often. I'm up trading overnight. I'm making a pre-market plan. I'm trading pre-market. I'm trading during the day. I'm doing my day job. And then trying to find that balance is hard. So I would say that, if you're looking for opportunities like that, there's only so much time. And that's why some of those things are priced accordingly. But yeah. This channel has many traders. Cop Maps. Are you talking about the YouTube channel or the Discord, or what are you thinking? I just want to make sure I answer that based on what you're defining as channel. Still there, Cop? I know there's a little delay, so hopefully if you're still here, you can follow up on that. If not, my apologies for not understanding that one. I would say this channel, yeah, all of the hosts here are active traders. We are trading every day, multiple times throughout the day, whether you're watching one of us or not. Like, we are there In the Discord, like I said, I have my own channel where I provide my updates based on what I'm doing and seeing, because I'm not streaming during Jake's hours, and I'm not streaming during Ron's and Alan's and Christian's. We're all doing our own things at those times. But if you want to follow along with what I'm doing in particular, I do have a channel in the Discord. But yep, it is there. All right, guys, if you have been here from the jump, awesome. Thank you so much for sticking around. I know this was kind of an impromptu thing, and people got a lot going on the weekend. So if you chose to spend any of your time with us here, I hope it was valuable. I appreciate you being here. And yeah, we'll give it just a couple minutes and we'll probably wrap this up. Do I plan to trade full time after a few years? Because it sounds like I like my job when most traders want to leave their job. I am kind of senior in my position at my job. I do like my job. I find it very fulfilling. I don't know that I would treat trading the same way if I didn't have it as an on the side thing. I believe that for me at this stage in my life and having kids and responsibilities and things like insurance and all that, it is less for me to worry about. And I can truly treat trading as its own thing, and it helps me really manage the risk because it's a supplement to something, and having a real job allows me to do it, where I feel like the burden or the pressure of having to provide for my family and pay for emergencies and things as a sole income from trading would skew very differently for me. And I think I'm actually able to be slightly more aggressive in certain instances with how I trade SPX in particular, because it's not like a do or die situation for me. And the success I've had over the last couple of years has afforded me a cushion to where like I could literally blow my entire account, and it would take a lot to do that all at once. Like I've afforded myself a very large cushion to be able to do what I'm doing and trade the way I'm trading. And I think that that is a gift. So to change my circumstances and trade full time is just not anything that I think anybody has to do. I think you can be successful trading and have it be beneficial to your life without it having to be all of your life. For the people who are trading full time, awesome. The freedom that they have is crazy. That is the attractive thing to me. My hope is that by the time, if you talk to me in 5 to 10 years, I hope I'm at a place where if I really wanted to, I could make that decision to go full-time trading very quickly and easily and get more of the freedom of my time back for me and my family instead of trading around the edges of my actual career. So that is where I'm at. But I think everybody's journey is different. How you view trading, I think, is hugely individual. The same thing that separates all of us and how we trade, whether it's our execution, our plans, our aggressiveness, our risk, everything is an individual decision. And I think that that's what's really interesting is like, what are you satisfied with trading? Like, why can't you be happy with $200 a day? Add it up at the end of the week, add it up at the end of a month. I think a lot of people, especially with props, as much as I laud prop firms, the reason why I still trade options or like options is because I can literally, it's in my pocket that day, that next day, right? Like I truly don't have to wait on anything or satisfy a rule. And I think where props are tricky for some is that if you don't look at process over profit, it is really, really, really easy to get sucked into the chasing of big numbers instead of looking at it as a reward for consistency. So I think consistency rules are great for people who struggle with being able to turn the switch off and not knowing when is enough. And taking that next trade is the very trade that actually robs you of your gains and then either causes you to tilt and go red or be a day from a payout and then blow the account. If you actually just said, I'm going to give myself 30 days and whatever I get at the end of 30 days is what I get, the freedom from that, I think, would be really powerful for people. But I think comparison is also the thief of joy. And in this space where you've got people who are lauding a lot of things in front of you to gain an audience, whatever their selfish motivations might be. I think what hopefully separates this channel from some of the others out there is that you have people who all started from nothing and have turned trading into something. What that something is going to vary from person to person, but I think for a lot of people, if you truly want to be sustainable, if you want this to be something that is life-changing for you, just take the simple view of how would it change my life today? Did I pay for my lunch today? Did I pay for a bill this week? Do I have the ability to reward myself with something I've always wanted in a month from now? Can I take somebody on a trip? Can I buy that thing I've wanted to splurge on and felt guilty about for myself without having to feel guilty about it because I otherwise wouldn't have made that money without this trade? If you cannot assign value to something immediately and look at it as the end of a journey and say, wherever I am in 30 days, did I do enough to earn a payout? Great, right? But I don't think a lot of people have that view. They're just looking for now. And those are the same people that are like swimming in debt and then are trading to try to get out of the debt trading got them into. Just don't be that person, Frame your why. What is the why about why you trade? And I think if you can detach yourself from the reward of it, you will go far. So yeah. Anyway, I appreciate you guys so much. I think we'll end it there. Again, thank you for joining. I hope to see you guys soon. I don't know if I'll be on Monday morning or Tuesday, Thursday still, or what the week schedule holds. But if you guys are, if you're down, please join me. You know where to find me. If you guys want to like and subscribe, thank you so much. And Mr. Ford, I just saw that come through, so I will send that to you here in just a few minutes. Congrats on that giveaway. And thank you guys for joining so much, all right? And good luck. Tune in for Ron or Jake on Sunday. We got Alan overnight in the pre-London. You've got me or Jake in the morning. And then you've got Christian in the afternoon. This is Project 365 on the Rake Trades Network. Peace.